What's up? My camera to be lagging a bit, so I'm just gonna go here. This is my thumbnail creation. Let's go to the charts. So in this video, I'm going to be breaking down what I learned last week. Um, it was a solid week. I think I'm up $600 last week, and that is with micros only. But I could do so much better. I mean, my biggest problem right now is still psychology. Like I'm honestly considering just letting my trades go, like set and forget, stop there, entry there. That's it. But basically, what I learned a lot is identifying the buy and sell program and the seek and destroy. I think I'm getting even better at that. I think if I do that and I continue with that, my entries are really good, but I take my profits way too soon. For example, this week, one of the trades I took was here, stop above there, and I took my profit there because I think I was uncertain um, about the bias, kind of. But not leaving a runner, it's very sloppy, I think, and I have this fear of losing to a degree. And it's weird because I didn't have this last year. Like I would trade with minis, pretty chill. Like I would go in, boom, make my quick buck, get out, and that was it. And this year it's slightly harder for some reason trading with the bigger sizes. But I think also I'm trading very systemically, and I'm getting progression even with the smaller sizes. Which I mean, $600. That's nearly 2% profit if you only trade one micro. I think maybe I did 1% profit because I did trade with some smaller sizes. Another trade I took was this one here. That was the best trade. Monday, boom, got very happy with that. I guess yeah, let's break it down. First trade here, slightly uncertain about the bias. I felt okay, we might continue up here, sweep this liquidity here, Um, this was wrong. It was wrong. Uh, and I I took the entry based on I felt looking at this price action here, the order flow what that was being engineered was we broke lower to take out stops up here, broke lower, uh, took out stops here like double tops. So the order flow was bearish. Smart money was engineering shorts, and then up on 9:30 open, which is when I tend to trade, right there, we get same thing yet again. Break below, boom, retail go short. Doesn't take out, don't take out this low. Right there, 9:30 open, boom, take out, retail go short. Where do they have their stops? Up there and even there. What does price do? Well, we go up and we sweep it. My entry is upon validating the bearish bank block, which is it's right there. Why? Because that's where that's where the order block began, right? That's where they trigger retail to go short, and up there is where smart money buy. If they wanted to be long, typically they tend to do it the other way. So very beautiful, but then I didn't hold it. Like I was like, okay, boom, nice. I mean, still it's a solid trade, but I won't be getting far with these one risk rewarders. I really won't. So I gotta get better at that. Um, Definitely, there's stuff for me to improve. Sorry, right? What I looking at this trade like in reverse, I I ought to just look at the higher time frame bias. I think that's what it comes down to. Like, it was slightly tricky to predict the bias there, but obviously when I'm even better, I will be able to do it. But it comes down to understanding the 4 hour draw, I would say. Uh, when we're in a sell or buy programs, something I've noticed is we always head for the 4 hour lower high initially. And if we want to pursue even further, we gotta study the daily for that. Um, so when are we ready to fall on the daily? That's when we can anticipate the daily big falls that just keeps on falling. And for me, I think the most likely opportunity we'll get for that is if we come back up, sweep a 4 hour high, and then the real crash can begin. Then we will just like daily get some solid setups, where our daily bias is, yeah, we're drawing lower. So we're gonna open like basically the daily profile with open, slightly up, Judah swing. That's where we enter, and then just keep following. God, I'm yapping now, aren't I? Let me go over my journal. Mhm. Uh, okay, so upon back testing, firstly, I want to go over when do we get the buy or sell programs. They tend to happen during New York Open. That's when we get our entry. This week, all three good entries we had, New York, uh, New York Open, right? That's the first one, 931. Have our bias, boom. First fake in the side direction, up, sweep liquidity. This is where banks short, validate or block, and then we keep falling. 4 hour or block is first draw. In this instance, I think in this instance here, I would, when getting even better, yeah, I anticipate the big fall to come right there, and so that's when you can kind of anticipate those bigger crashes as well. Let's go back to the other crashes were Monday, Tuesday, and Thursday, right? So Monday here, New York Open, same thing. What do we get? Like very clear trend line. This is slightly before, but still same principle. First move, like when we open, what position do people have? People are bullish. Where do they have their stops? Below the trend line. Where is our 4 hour high? It's right up there. So the trade becomes there. And for when we are really getting really good, uh, it will be that we enter below there. Probably stop below there because there is no reason for us to go down all the way there if we are bullish. Like the liquidity is below there because that's the trend line breakout, right? So that's the pro entry. This is the more secure entry, like that. Um, in this instance, you could up. In this instance, I kept on holding. I moved my stop loss, or yeah, I first sold it up there. Then I took another entry upon validating this one. When we are in the sell program, uh, we get no reversals until we hit that draw. That's one thing I've learned. Like order blocks are going to be respected until we hit that draw. So this one there, first order block. I don't remember. Did this one sweep this low? 803, 803. No, it didn't. So we don't get the reversal. You know what? I don't even know if I took that trade, so I'm not gonna speculate on that. I know I took this trade though. What I ought to do, I mean, I'm always trading on my laptop, and so I don't record the videos. But I really got to start recording the videos as well. Right, Tuesday, same thing. Uh, Slightly more tricky though, but our bias is bullish. This draw, um, I mean, that's the main draw. Very, that's the most obvious draw. And if we break that high, well, that means we are pursuing higher because that's a break of a higher time frame or block. So what liquidity are we pursuing then? Well, it was the daily highs that I showed before. Uh, but yeah, 9:30 open, get the bullish inducement right there. Um, Boom, retail go long, their stops below there. This wasn't a very clean trade, but basically we go down, sweep that low, touch this bank block there that was untapped, and then we get a lower time frame bank block. I mean, it was this, which is it's a really shit. It's a shit trade, really. Risk reward is just not there. Think about I didn't even take this trade, but that's the logic of this one. You want to find first the inducement, move down, sweep where retail has their stops, and then the move comes. Uh, but this was Tuesday as well before the FOMC, so that's the day when you can anticipate seek and destroy. And seek and destroy, that's probably the main takeaway I've had from these last 2 days, 2 weeks. Like, if we're not in a seek and destroy, my strategy is highly, it works very good. I just got to get better at risk management and holding my winners. But from an entry point of view, it's very good. I find very much logic in it. But if we're in a seek and destroy, it's hard to trade. It's really hard. Doesn't even work, I dare say. Like the 9:30 here. Let's say, I mean, our bias here would have been overall pretty neutral going in, but probably more bullish than bearish because of the way we had induced order flow. And so what you would want to see then is a very clean up, down, up. I didn't trade Wednesday because of FMC. This is just why. Like, it just violates order blocks in every single direction on both ends. Like, okay, let's say you were bearish. Okay, boom. We get this inducement. Boom. Recently go short. Stops below there. Okay, we validate that entry. We go short. Boom. Stops taken. Like, what are you gonna do there? Let's say you were long. Okay, you go long there. Retail Esther stops below there. Boom. We tap in the order block. Nice. Okay. Entry. Stops taken. So if we are in the seek and destroy, I think that's one big thing that I'm really prioritizing. When are we in that? When do we not trade? That's something I'm working on. But very, very important thing. Thursday. This was the day, the big day. Should have anticipated the crash to begin. Sloppy, we didn't do it, but we caught a winning trade, responsible for like half the weekly profits. But God, I can get so much better at this game, which I love. I love that fact. I still have so much to learn. Um, but yeah, we get this initial break below, boom, retail short. Where do they have their stops? Above there and there. I would have taken this entry even if we didn't sweep this high. We go into a higher time frame bearish short block. Like, this is where the pros enter. In this order block, no reason to sweep this. Why would they sweep their own stops, right? and then just go. I might start with that when because this used to be my old strat. I would enter there. Might start with that, because if I look at the risk rewards of these, the thing is I can take these as long as I'm good at identifying if we are in a buy or sell environment. Like otherwise, it's not very good. The risk rewards on these pretty damn good. So 2.3 compared to 5.4. Because the thing is, the risk, like the stop loss, tends not to be too big. So I'll look for those next week. Thing is, it can be like a bit shit. When was it? So this one here. Uh, I mean that's all right. I think that one's all right. Best thing is probably if we get like a 5-second reversal there. Let's check Tuesday because Tuesday was tricky as well. When you get this one and then you get this big deep reversal. I think it was this deep because we wanted to tap into the order block, the bank block, but it wasn't that easy. Like basically then the entry would have been probably there and stop working there, and I don't know, man. Don't want to take that big risk because that's a big risk. What I would suggest if we want to get these big retracements is look for the S15 reversal. And that's probably like in general the best thing to do. Let's see if we got anything on Thursday as well. Yeah, so Thursday we got this one as a reversal signal, which is very beautiful, I have to say. Another thing I noticed this week is that whenever we are in a seller buy program and we start to move towards liquidity, the first 5 minute fair value gap is a breakaway gap. Like when we start a real move, we get a breakaway gap, and I've noticed it very clearly this week. With every single time we were in the breakaway program, and the breakaway gap, you don't get a tap below equilibrium. Often you don't even get a tap at all. But in all instances this week, that first fair value gap on tap on the 5 minute. Very interesting. So that's like a signal you're right or wrong, I think. But yeah, for me, the most important thing for me to move forward is getting even better at tiring to hold my trades, sizing up, uh, getting even better at the entries, I think as well. Like, and I think the main thing is understanding when we're in a buy or sell program and a seek and destroy program. When I manage to do that even better, I'm gonna be a really good trader, I think. And now that I know the problem, that's when I can start solving it, start digesting it in my mind. We saw very clear seek and destroy ahead of FOMC. Thank you, ICT, for shouting that out. Let's see the economic calendar ahead of next week. Probably like CPI, right? Mm, No farm employment on Friday. Uh, which is a big one. So like probably keep that in mind. Friday, known for employment. What can we anticipate? Okay, probably Thursday will be a bit of a seek and destroy. Um, so that's kind of me speculating because I haven't backtested it that much, but sounds logical. We also have, let me see the news last week. Let's see if we find a pattern. So Friday, seek and destroy, 8:30 news. Was the London pretty good Friday? Looks decent, but not so good. 8:30 news. Wednesday FOMC. Tuesday PM session was at Seek and Destroy, which was ahead of FOMC. Monday, no news. Tuesday, no news. No news days. That might be it. Might be a good sign. Interesting. Monday, ISM. So maybe we get Seek and Destroy uh, until that. 10 a.m. Seek and Destroy. Tuesday, 10 a.m. news as well. By, I don't know. I would rather, you know what? I'll bet this during the week. We have a lot of uh, 10 a.m. news. How does this impact the seek and destroy behaviors? I'll write that in my learning goals. So next week, I anticipate the big crash to begin. We have 10 a.m. news. Monday, Tuesday, Wednesday. We have it Thursday as well. No. And 8:30 a.m. news on Thursday and Friday. Sorry for the wrong grammar. Whatever. Study how this impacts the seek destroy behavior. Another goal is I anticipate so much to learn, so much to see. Well, I think that's it for today. I'm gonna finalize the journal, but that might not be something for all of y'all. Thank you for anyone who checked in. Wish you all the best. Peace.